We are I guess we're the closing session here in this hall, and we got the exciting pitch contest going on next door. So, what we figured we'd do is spend just a couple minutes giving some background about the bank and what we're doing here, and then we're happy to take any questions, and maybe Vera, if you want to kick us off.
Yeah, so my name is Vera Shokina. I work with Andy Tsao. Together we cover global markets, global emerging markets. Just to give you a little bit of history about the bank was set up 30 years ago by the leading venture capital funds. So similar like Citibank always goes after its clients like Coca-Cola, Johnson & Johnson, and probably Citibank came to Turkey after Johnson & Johnson and Coca-Cola came to Turkey. Similar, Silicon Valley Bank for 30 years focused on venture capital funds, and whenever venture capital funds would go to a new region and it would become innovation hub and they would start doing findings in that region, Silicon Valley Bank would follow the clients, the funds, and also focus on their business and help them in those places. So Silicon Valley Bank has now 30 offices in the United States. It's all innovation hubs. There is maybe 5 or 6 in Silicon Valley, 3 in Los Angeles area, Dallas, Houston, Austin, Texas. So whenever there is a small innovation hub, that's where the bank goes. In the last 10 years, we started expanding internationally, again, following our clients, funds and VC-backed portfolio companies. We opened offices in UK, and actually Andy he was the first person on the ground. Maybe you'll share some of the experience of the UK office, China, Israel, and India. And now we're focusing on the new emerging markets, and the group manages Latin America markets, Eastern Europe, Russia, Turkey, Australia, and still help with India and China as it goes.
Great. I think that's a good summary. I mean, just to give you a sense of our focus, the bank is exclusively focused on tech and innovation and venture capital, private equity. The only thing we do outside of that is a little bit of premium wines. That's about 10% of our business for those venture capitalists and entrepreneurs that made a lot of money. They wanted to reduce that sum of money by starting a winery, and so we got into that business as well. But in the U.S., we bank more than 50% of the venture-backed technology companies, and in terms of the investor community, it's a little bit stronger than that. But as we've been talking about in the other hall, that the innovation business is really globalizing at an ever accelerating rate. And so, as Vera described, we've been expanding internationally, but looking at the developing markets, I think really points a path towards the future, because if you look at where the growth is happening, it's really in the emerging markets. If you look at, I've seen a number of studies. I think PwC did a nice one where in 2050, the top economies of the world are China, India, U.S., Indonesia, Brazil, Mexico, so on and so forth. So it is where the growth is happening, and Silicon Valley Bank wants to be, in the innovation hubs of the future. So that's our motivation here in Turkey. We've been here for 2.5 years. This is my 5th trip over to Turkey. We are doing business offshore. We're not licensed to do business onshore in Turkey, but we can certainly help investors and entrepreneurs with their offshore banking off our U.S. platform. That might mean entrepreneurs that are looking to come to the U.S. for market entry, or in some cases, set up holding companies to receive capital offshore. We can provide services at that level as well. And one of the more valuable things that we can do for you guys outside of physical bank products and services is to help with connections and extending our network as you come to the U.S. or, for that matter, any of the markets that we operate in. We're very focused in each of the markets that we operate in, and we make it our business to know the leading investors and entrepreneurs around the world. So we'll stop there, and we're happy to take any questions from the audience. Barsh.
So you've been coming here quite often now, and are there any other products that Silicon Valley provide offshore from anywhere from, you're talking about different services for helping offshore, but also helping with the capital requirement here through offshore facilities, like could be equity, could be venture debt, could be working capital financing, or things like that?
Yeah, thank you, Barsh. We get that question asked a lot, and maybe what we can do is, Vera, maybe you could talk a little bit about venture debt generically. And let me say straight up that credit is something that we're thinking about as we look at the emerging markets, but we're not doing that in any of the new emerging markets that we're operating in. It's a logical extension of what we do, because we are, as you know, a very finance-centric organization, and we hope to do that in the in the not-too-distant future. But maybe it'd be interesting for the group just to better understand some of the more differentiated products that we do have, like venture debt, where I don't think there's much of that happening in Turkey. I think that'd be fair to say.
Yeah, so in general, we spend probably 30% of our time on working within the ecosystem and helping the funds and entrepreneurs with the advice and sharing experience and best practices. And one of the things that I find myself all the time talking to entrepreneurs from Turkey or from Eastern Europe, it's actually talking through them why venture debt potentially is not the right time for them yet. Venture debt is always used to supplement equity. So the way it usually works in the United States, the classical example, a syndicate of funds put $5 million into the company, and Silicon Valley Bank comes and on top of the $5 million, let's say by Sequoia, NA, and Greylock, they put additional $2 million. It's very beneficial to the venture capitalists because they kind of think they put $5 million on the account and the company is $7 million. It's good for the entrepreneur because, again, he didn't get diluted and he got $2 extra million. And for the bank, it's good because we're putting debt to work and make money on this. The logic behind this is that, statistically we look at the large portfolio of companies, and our experience in large American funds that manage millions of dollars, they actually stay with companies over the long period of time. They don't abandon the companies after Series A. They support through Series B, Series C, and then if there is no success, then go to Series D, then they stop financing. By that time, our loan is usually repaid. The case with the emerging markets, we are trying to set up the same partnerships with the funds, but the funds are just not big enough. If you only have, let's say, $20 million, even if you have the winner, great company, you just don't have enough capital to support it, through the exit. So the funds, at emerging markets, they get diluted on the way, and in bad case scenarios, they start abandoning the company. So to put as much money as possible in the winners. So it's not a really good case for venture debt when the risks are very high, and statistically there is not a proven case. And it's also not good for entrepreneurs as well, right? Because it's not equity money. The bank cannot take the same risk on the debt. We just cannot take such big losses, and we cannot expect to lose money on 10 deals and have a very high returns on like 1 or 2 deals, because we actually in America venture debt is pretty cheap. It's usually 4 or 5% on the good deals, but it's always to supplement the equity investors. So that's why venture debt is hardly ever used outside even of Silicon Valley. We are much more conservative if the venture debt is given in, let's say, Austin, Texas, or Seattle. We're much more conservative again because the funds are not as large, not as aggressive. They look for companies with different profile. So, venture debt is used a lot less. And generally, companies come to us for debt already when the business model is finalized, and we look at the companies at that time the same way traditional banks look, even though we usually come a little bit earlier.
Is there a threshold
Well, I
Yeah.
think it needs.
I mean, Barish, another way around that is also seeing when funds begin to co-invest together in situations, and you have more capital around the table. I think and we've learned this by when we started in Europe and Israel. It's very easy for markets to mix up new markets rather when it's not a familiar product to mix up debt and equity, and certainly. When it's introduced in the market, there's a tendency for entrepreneurs and investors to say, oh, that's pretty much like venture capital. And there always a point in time when a company needs a pivot, et cetera, where it becomes clear that, all right, this bucket, we need to pay Silicon Valley Bank back. So, but in any event, I think it is tied somewhat to the maturity of an ecosystem. And as these markets continue to develop, we'd probably look at some later stage opportunities first. So I would bet in the not too distant future, and we are doing it in Europe, we are doing it in China at this point. I think there would be a case study for doing it here as well, a business case rather.
By here you mean only in Turkey or in the region, Middle East included?
Yeah, thank you for that question. It's really Turkey today. I think we've learned a lot about the region through our experiences here in Turkey. Whether this event's great, it's unbelievable the variety of entrepreneurs that are here from across the region. We also work pretty closely with Endeavor here in Turkey and attending whether it's the ISP or the investor network where they gather a lot of the regional investors. We've learned quite a bit about the Middle East and the potential opportunities there. But today, the effort is still focused on Turkey.
All right. Any questions? Maybe.
Hi, my name is Martin, and you mentioned that you are investing in CE Eurogean, so I would like to ask if your investment is diluted by EU incentives like grants and etc., and if you prefer that. Okay, one more time. If you prefer that your investment is diluted by EU grants or any, government support.
So I'm just trying to better understand your question. Yeah. That are we diluted by? Do you prefer
to dilute your investment by EU grants?
The FP7 and Euro 2020 projects.
Yeah, okay.
I think what you meant is whether you prefer or we prefer the startups with the government participation, right? When they give grants or they make an investment in the company. So I think, we're looking in, different market, different ways. In the United States, it's, even though some, breakthrough technologies were initiated in the American government, it's not very typical in Silicon Valley that a lot of companies use government capital. There is the whole big area for small businesses, and there are grants. But in the those revolutionary ideas that are going to disrupt the industry, it's very not typical for the government to participate. So it's not that we prefer or not prefer, we just don't see many cases in our innovation industry. Having said this about US, in countries like Turkey, we might expect more government participation. Government is playing a bigger role into the setting up of the innovation economy. I think they should right now because there is lack of capital, and I think any investor right now who seeded the companies in Turkey would welcome additional participation from the government if it's done appropriately in terms of the how much control they get in the company, how much they have the influence. They shouldn't be pushing the company too much, but just to create and start up the ecosystem. I think at this time, I think everybody would welcome the government participation.
Yeah, and I would only add that a lot of the government-related entities, development banks, there's oftentimes a policy aspect to why they're supporting the venture capital industry. So when they make their decision-making for supporting companies may be oftentimes not necessarily financially driven. And that's in the way we manage our business, in the way we think that how investors approach investing and how they want to support their companies. It's more purely around financial return. So when you have that, government entities, oftentimes it's hard to predict how they're going to come out in a particular situation because their objectives are a little bit different down the road. And that's what makes it a little bit tricky working with some of the more government-related entities.
Any last parting thoughts that you want people to remember?
Well, again, I would say that we continue to be enthusiastic about the development of the ecosystem. As I mentioned in the other room, that even in the 2.5 years we've been coming here, we've visited Yemek-Sepeta 2.5 years ago, pre-exit, and now they've gotten to terrific outcome, and Positron 18 months ago, et cetera. So we're seeing good progress in the ecosystem. In fact, we're probably seeing more exit activity than a lot of the other emerging markets that we're covering. So that's pretty. That's great for the ecosystem. And I think that will continue to complete that virtuous cycle where you have experienced entrepreneurs, you have role models, these guys, and we've already seen it here, right? Some of the founders are now back in the market becoming angel investors, et cetera. So those kind of things really accelerate the development of the ecosystem. So I would just remind folks that while a lot of our effort here is business development, getting to know the leading global entrepreneurs, leading investors, but we'd love to work with you guys too. If there are ways that we can on an offshore basis, please come see either Vera or myself, and we will certainly be here for Startup Istanbul next year, if not sooner.
Super nice. Thanks so much for your time. I think your panel is the last good one because it kind of tied up to the early stage accelerator discussion we had and tied up to the large pool. I think there's a lot of startups that had been around for, I can't call them startups anymore, like 10-year companies, 12-year companies. That side, that will make you happy. And the point is, I think, making them get down the ranks and start backing other companies so it becomes a full cycle. Much appreciated. Thank you so much.
Thank you.
Thank
You're
you.
welcome.